Hey everyone, today is Monday, 8 o'clock p.m., August 3rd, 2020. Let's take a look at the market today. The market right now is closed, and we have the S&P E-mini that's just going for a new high. We are at a new high right now, and I think we are going to continue to go up and close this particular gap. Then there might be in my opinion, I think the market right now is just is stable. It's stable. I don't know how far this is gonna go, but there could be a short opportunity coming up. I don't think the long opportunity is there. You can see that here. If you went long here, you have a lot of volatilities, and it wasn't an excellent way of going long the market because it's just so volatile, and the dip here is just so sharp, it's so pointy. It's very difficult to enter your position unless you have some orders just waiting on these levels. This is really difficult to catch these kind of moves. That is very different from a point here where we had such a huge rally. That was very good profit opportunities, 16% without any dips. And you can see that here the market is getting very zigzagging, and it's very difficult to trade in this market, in my opinion. And I have been staying away from this market for a while. Since right here, I sold my shares right here, and now it's obviously higher, but holding through this market is just not my interest. And we'll see. I think the market will go a bit higher. I think there might be a short opportunity coming in when we have when the price deviates too much from this line, right? So let's see if we have this line, this particular trend, we can hold on. We can just, let me see. I'll draw a line in parallel and see if we can have a potential kind of range here. So it could be that, what if the price goes up here, right, to the 3,400, just like this, and maybe we can have a correction from this point. I don't know. Maybe we can have something like this, maybe when the price get up here to the 3,300, just barely. I think one of the potential scenario here is that honestly, that's something I'm looking for, is that the price could potentially getting close to the all-time high, but then we start going reverse, right? When the price is getting close to the all-time high, people are eager to buy, thinking we're gonna break out, and maybe that's when the price is gonna hit a brick wall. So I would put a alert here at somewhere just slightly below the all-time high, like here, and then I just set it and forget it. I'm just gonna set alert here, and when the price get up here, then we can observe what the price is gonna do. Okay. And other than that, I don't think there's any reason to go long, to initialize new long positions at this point, or initialize any short positions at this point. It just, the risk and reward for both long and shorts are just not there, right? If you want to short this market, just go wait for a little bit more to see how the market reacts when it gets to, fills this gap. We have this gap that's just unfilled on the future, and that is something that's going to be filled, in my opinion, and we're going to get up there. Okay, and let's take a look at NASDAQ today. NASDAQ obviously is it actually underperformed a little bit compared to the S&P if you look at this, because the NASDAQ right now is at the all-time high, while the S&P is actually above the previous high, right? So this actually underperformed, and I think maybe when the Nasdaq reach here, the S&P going to reach that high spot, we can have some sort of short trade that's coming in. So I would, personally put I'll put an alert here, maybe, for the Nasdaq. Oh, what is this? Let me delete this. So I'll put an alert here, personally, for the Nasdaq, maybe around this level. I think as the time goes on, it could go somewhere here, right? So we can put an alert here. So just once the price get there, it's gonna notify me, and yeah, then we'll see how the price action works. One thing I'm gonna show the market with is probably gonna be with another VIX product. And right now you can see the VIX product is just maintaining this kind of support. Technical analysis doesn't really work for the VIX products, but this one behavior of the VIX product I want to bring you guys into attention is that all the massive opportunities that comes in. Let me just delete this. This is bad lines. So if you really want to trade this product and looking for some really explosive opportunities, I highly recommend to if you're adventurous enough, I think the only way to trade this one is just sometimes you have to average down. And you don't want to average down when it's at a certain level, like this is support. Looks like a support, like it's hovering around a certain level. Usually when the VIX hovering at a certain level, I'm talking about the derivative product. So the VIX itself is actually at a different level. When the derivative product is hovering around this certain level like this, and it's getting more, you can see that here is getting the volatility of the VIX. The VIX is getting lower and lower. Usually this thing's gonna break down to the downside. So usually what's gonna happen, this thing's gonna break down even lower, right? The reason is there are a lot of amateurs buying at these dips, at these support. And these amateurs don't understand how the VIX product is structured. They thought support resistance matters, but no. The way the VIX works is that these kind of supports are artificial propped by market makers. Sometimes, if you look at the VIX itself, the VIX itself is actually just dripping down, and although it's still at a fairly high level, and it actually is just holding here, right? And it actually broke down quite a bit already, right? Previously in the previous day, and it hasn't reflected on the derivative market. And I think that this thing is just gonna break down to a much lower level. And so we could see a potential crash in the UVXY in the coming few days. It might end up like this. So I highly recommend, if you are thinking about shorting this market, definitely do not buy the VIX or any of the VIX product at this point. You probably have to wait for a move like this, just drifting down and down and down and down, and maybe wait for this to flatten out a little bit, then you buy here, right? Then you probably want to buy here, just like that, or just like this, right? You want to wait for this to flatten out, and you don't want to buy here because this doesn't look like a bottom for the VIX. And unfortunately, you don't know how far it's gonna go, right? Every time it broke a support level, you don't know how far it's gonna go, right? Every time it broke down from what looks like a support, you don't know how far it's gonna go, and that's because it's a Russian roulette. It's literally a Russian roulette in stock market trading. That's how it works, right? You don't know how far the stock market is gonna go up. And that's why you don't know how far the VIX is going to go down before the next rally. And eventually, you're going to recover all your paper losses if you can hold on. But you just don't know when the light at the end of the tunnel is going to appear. That's a metaphor. And that's why most of the time for these kind of volatility funds. So if you look at these kind of volatility funds, they're insurance companies basically. They're insuring the portfolio insurance, right? These portfolio insurance companies, like there's this one Black Swan fund. Most of the time they produce slightly negative returns. The reason is because of this. They have a lot of volatility products on their portfolio. Most of the time, they have slightly negative returns. And eventually, one day, this thing spikes up. They have a massively positive return within like a month or two. The reason is their product is structured this way. Their products are all like this. They have drifting down. For example, this one. Imagine you were trading here. You saw this thing came down a lot. You had a spike. You saw this as support. No, you didn't. You saw this might be is lower now. You think this is cheap. No, it's not. You think this is cheap. No, it's not. And you think this is cheap. Right now it's cheap. No, it's not. Right. You think right now it's cheap. 70. Imagine even if you kind of bought it as a support, potential support. You think that is a support, that's 140. By the time you get here, you lost more than 50% of your money. You must be in a lot of pain. And you think that is a potential support? No, it went to 55. You see that? And this thing could go down lower and lower and lower and lower. And this is 43 now. So even if you bought at 80, that's pretty far away from this point. You bought at 80, now you are 50% down again. And how about now? Okay, now it seems to be broken off the level. And oh yeah, so that was it. That was the 2018 kind of a little crash over there. So you can see the spike happens really quickly, and if you miss it, you miss it. But the pain is quite excruciating on the way down if you bought a wrong spot. So trading the VIX product is extremely difficult, and I absolutely do not recommend the average trader with even aggressive risk appetite to trade this product. It's ridiculously difficult, and I only trade this maybe once or twice a year. Okay, when I see some opportunities, and I get out really quick. Once I see some sort of move, once I see this goes against me for even like 2%, 3%, I'm out. Like I'm out so fast. Okay, and that's all I want to talk about today. Oh yeah, so let's take a look at the cryptocurrency market right now. Let's see, cryptocurrency market. It seems that Ethereum, Bitcoin, all that stuff they have gone back up. And I don't really see any signs of slowing down in this market right now. Let me see. It could be, right now. Right now the price was going vertical. You can see that here. This line obviously not sustainable, right? If it keeps going like this, just looking at the price, if a price follows that particular move, by August 8th, we're like at 1,000. By August 23rd, end of this month, August 30th, end of the month, we're going to be at 3,000. So obviously that's probably not a proper trajectory. So it's logical that we're going to have this kind of crash, flash crash. And right now, this move, let's see if this is something that's sustainable. It's very easy to tell by let's see if it's sustainable. Even this slope. I think this slope is quite steep, because by September 14th we're at 1,000. Well, it could be sustainable because we had these kind of moves before. So who knows? Maybe this is a much sustainable slope. That's how quick the price could run up to. Who knows, right? And we'll see. And that's it. That's for today. Talk next time.